Everyone, I'm going to go over a cheap way to play Nvidia for earnings, but also how to really dissect charts, not necessarily by the chart itself, but more from the emotional point of view of how traders and investors think. So let's get into the video and share the screen here, and then we'll dive deep into Nvidia. So what I want, and you could do this at home, is just look at a blank chart of Nvidia. If you're on my telegrams, you might have saw me post a picture of this. Let's see if I can pull it up here. There we go. Of this right here, where you're probably wondering, what in the world does this look like a third grade math, right? But I want to go over in a video context what everything means and the why. So let's go ahead. And let's first look at Nvidia. We'll just zoom in a little bit on the chart. We got volume down below. This is like if you have nothing on your chart, just a standard chart, this is what it probably looks like. So every time Nvidia is in a sideways or console, can't say the word right this morning, a period of consolidation, Nvidia sells off. So here, sell off, right? Here, well, this is earnings, so we'll forget about it. But here, sell off, sad face. Here, sell off, sad face. Here, sell off. Here, brief drop, shakeout. But even here, sad face, okay? And why is that? Why do we see these periods of a rally, then a sell-off? Well, where's the most pain? I don't want you to go and think of it as you, but where's everyone else trading? So when Nvidia is up, it gets all over the media. People want to buy the stock, right? Because it's safe. It's a good investment, they say. So when does that happen? Does that happen here on the lows? Hell no, right? You're going to come in on a huge red day and buy the stock and ride it? No. What happens is when you see the stock start to break out, like here, people buy, right? I got a bug on me. So people buy. Then what happens? They feel pain. All right, we have a big green day. Stock's going up 3 days in a row. I'm going to buy. What happens? Straight down. Okay, ooh, we got the bounce. This is it. Nvidia's going to rally again. Boom, right back in pain. You see what I'm saying? How every time it looks safe, oh wow, Nvidia rallied 20% in a few days. I'm going to buy. And what happens? Sell off. So every time it is safe to buy, in the terms of most people, the max pain is to the downside. And that is where the market is always going to take you. When it looks too easy, or when it is easy, the market's going to punish the investor. So every time we get in a period of it's safe to buy, we get punished. And if we look more recently, okay, we'll zoom in back to last month. Here we are again, right? Big green candle. Yes, this is it. This is the big rally. We're going to 150. And then what happens? A couple of days. Oh no, boom. Big red candle. So what happens on these red candles? People get stopped out. So when you have just like a protective stop loss, those stop orders get hit, and that's why you have these big red candles, because people think it's safe, and then what do? They put their stop over the previous low, and you have that quick drawdown. So just like if you were to buy a stock, what do? You put your protective stop loss so it automatically sells, usually over a prior low, right? Or a lot of times in day trading, you'll hear of the low of the day, people put stop losses. So right here, that brings me to currently, where we have Nvidia earnings on looks to be on the 20th of next week, which will be next Wednesday. So I'm already getting the emails from the donkeys, and what are they doing? Trust me, I go to my Telegram or my email, Nvidia, it's the greatest stock ever. Well, so where's the next period of the most pain? And where there's the most pain, there's the most profit, by the way. Well, to the downside. So where could it go? right? Because everyone is buying Nvidia up here, hoping shares get to 150. So hoping and wishing and dreaming is not a strategy. So these people who are buying up here, what are they going to do? They're going to get sad because the market's going to punish them. So where are they going to put their stop loss? Well, first stop loss, prior low. So that's about 143.5. Second stop loss, 140. And this one a little bit more wider, so more common, right? Next stop loss, let's say you bought Nvidia shares in here, right? So you bought in here, buy. Or you bought in here, the buy. Where's there the most pain? Prior lows, right? Prior lows. So we have our first low, 140. We break that. Sell stops are going to get triggered. So you're going to have lots of stop losses get hit. You're going to have a big red candle. And where can it go? Probably right here. So this is our next level of max pain, right here, okay? So about 132. Then if those sell stops get triggered, let's say earnings are bad, where are we going to go? Probably down here. So that's about 128. So that's going to be some real pain, right? And then if we go, let's see where that 128 is. Oh, look where it brings us. Right into our period where we have some consolidation. So we used to call them volume pockets. I can't get a point of control on here though. They have monkey bars, but nothing great on toss. So that would leave us somewhere between this 125 to 130 range for Nvidia. So for earnings, what I was simply looking at was looking to Nvidia doing the next week 130 calls for 130. Oh, I know. And 130 aligns us just about that $14.50 move. We'll call it 15 bucks. Shares are down about $1.10 pre-market because AMAT. So we're going to open up around 145.5, $15 lower. What does that equal? About 130. So it even gets to that measured move target of Nvidia for the earnings. And if you have a greater than expected move, maybe we get down to 125, you're buying 130 to make $5. It's a pretty good ROI. If you get a crash and let's say we print 120, let's just say hypothetically, your 130 that you paid for the puts are going to go to $10. It's almost 10x return. So the risk versus reward is very, very favorable. You already see Nvidia selling off here pre-market. All those chips really are selling off because AMAT, a couple other names, look at AMAT. It's down almost $20 on earnings. Okay, that's a huge move. And the expected move was only $7. So those 170 puts are going to go from 40 cents to $1.50. Now, you also have other chips like Marvel, right, which is a very overvalued name. I think they have earnings December 6th, and we saw some pretty aggressive put buying in Marvel, right? 300 grand. And the 93 in the money puts. We love seeing in the money puts. So you could play Nvidia, you could play SMH, and don't get me started on the fraud, because we love these fraud companies. The short sellers called this one. Supermicro is Nvidia's third largest customer. Don't you think that if one Roach is in Supermicro and they do business with Nvidia, the third biggest customer, don't you think there's going to be more roaches spreading over to Nvidia? There's never just one roach. There's never just one rat. Maybe Supermicro does some kind of massive short squeeze, and you might actually have money come out in Nvidia into Supermicro. But just a little thing to consider. By the way, Domino's Pizza, you had a couple things on the news flow scanner. Maybe there'll be a link where you can buy. Domino's Pizza, Buffett stock. We saw it yesterday, the calls. Domino's Pizza, Buffett has a stake in the company, shares up almost $30 pre-market. And his other investment on his 13F filing is Pool. And look at Pool up $20 pre-market. This is the first time I have ever seen two of Buffett's stocks get leaked. Just goes to show you the kind of market we're in. So I hope this video helps. You don't need anything fancy. You just need to know where your opponent, what their hand is. And in Nvidia, it looks like the opponent hand is a bluff. So don't get caught up in the hype. I get it. You're probably seeing Nvidia bullish, Nvidia bullish, Nvidia bullish everywhere you look. When everyone says bullish, think the other side and look bearish.